Hey everybody, Chuck Barone. Back at my desk. It's Monday, June the 5th, 2023. Another week of bedlam on Wall Street, the United States, our economy. We know we got the Fed meeting early next week, so this week's going to be the final big build-up. Interesting stuff going down this week, guys. Not a lot, I mean, it's going to be kind of a weird week, but we'll go over all that here pretty quick. Before we start up, though, I just want to welcome everybody to the show. We appreciate your support. We appreciate you guys watching the videos and all you do for us every day. We appreciate you guys. All right, so let's look at these markets today. A big nothing burger, really anywhere. Stock market today down, but down very small, marginal. No news day, so not much happening. The Dow drops 199 points, 33,562 on the Dow. The S&P down 8 points, 4273. Actually was up loftier at higher numbers during the day, came back down to finish kind of crummy. NASDAQ down 11, 13,229. Nothing today, nothing there. Bond market, basically the same thing, flat markets. The 10-year basically unchanged, 3.69%. The 2-year falls 3 basis points, 4.47%. So again, not a lot of action in these markets today. The dollar also basically flat today, 104.02 on the index, still holding strong, but no real movement there. Metals today had a mixed day. You got gold up $13.80 per ounce at $1,961.30 per ounce. Silver drops 24 cents. Drops 2 cents to $23.56. So there's not a lot of activity in these markets today. Oil up very small, up 5 cents per barrel, $71.79 for a barrel of West Texas Intermediate. Right in that trough we've been telling you guys about. The only real market mover today, Bitcoin having a tough day today, down $1,585, 25,665 for Bitcoin. I still think it's a pretty decent number, especially after a dramatic day like this today. I think you got a little profit taking in there, obviously. So we'll see where Bitcoin goes over the next couple of weeks. As we do every Monday, we'll give you guys a little bit of an idea on the data we're going to get this week, what we can expect, what the data might look like, at least what it's projected to look like, and how it might move these markets. So today, Monday, quiet day, really. We did get factory orders, which factory orders would have fallen pretty significantly if it wasn't for defense. We know defense is boom, 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 and you go Ukraine. So we have the war going, but we're providing weapons for, defense moving, keeping the factory orders up a little bit. Services barely over 50% down today. The number was expected to come in at 52.2 on the ISM index, coming in at 50.3. 50 is the Mendoza line. Anything over 50 signifies growth. Anything under 50 signifies shrinkage, right? So basically manufacturing factory sitting there flat, except for defense, of course. Tomorrow will be a quiet day. No real data coming out that I've been made aware of through what I've been looking through today. On Wednesday, we'll get some interesting stuff that could very well may move markets. We'll get consumer credit. As we talked about last week, consumers now over $1 trillion in debt. It's expected that consumers will have added $21.6 billion of new debt in May. We'll also on Wednesday get the mortgage bankers index, which is expected to be down for both refis and sales, rates creeping back up. We'll also get the U.S. trade deficit info, which is expected to be go U.S. We added $75.2 billion to the trade deficit in May. So not a lot of great news coming up on Wednesday. Thursday we'll get jobless. That's important. That's I'm sure right now that's the main driver of what the Fed's looking at. Claims are expected to come in 236,000 up from 232 last week. Jobs and jobless claims have been the big stickler in the Fed's program right now. I've been telling everybody this market, this economy is still going. They don't really bother even looking at earnings, which are pretty stellar for a lot of companies right now. But jobless claims is where the Fed's looking, so that report will be important. really the market's been beating what they've been expecting pretty frequently, so it'll be interesting to see where that comes in. We'll also get wholesale inventories for our producers. Wholesale inventory is actually expected to be down in May, which is a surprise to me. I figure, with sales kind of slowing, at least that's what we're led to believe. They really aren't, though. This economy is actually still going pretty strong. So wholesale inventory is down, which is good for manufacturing for sure. They want to rebuild those inventories sooner or later. And then on Friday, we'll really get pretty much finish up the week with not much of information. We'll get a short selling report. It's going to show short selling really contracting, shorts covering their positions. This doomsaying idea of the economy and the markets not really coming to pass. I'm kind of hoping everybody will figure the markets are going to rally, because the contrarian in me will probably say that's the time where the big kablooey is going to come, because it will come sooner or later, right, guys? All right, so here's the news this week, right? Today's stuff. The big question. We know we got the Fed meeting next Monday and Tuesday. We know that the markets are expecting the Fed to pause. There's been some chatter and some wagering on Wall Street that the Fed would actually increase rates coming up here at this meeting in June. What do you guys think? I mean, I still lean toward pause, right? But there's lots of mixed feelings coming around. I was reading Larry Summers today was saying, it's fine if the Fed pauses in June, as long as they're prepared to raise rates 0.5 point in July if the economy stays strong. Pretty much implying that a pause is not a great idea. Thinks the economy is still a little bit too hot. The economy too hot certainly to get to 2% inflation from where we are now. But then you got other people coming out saying that, that begging the Fed not to kill the economy for this 2% target. So it's going to be, they're kind of now getting into the place where they're going to have to really make some hard choices. The economy fighting these Fed rate increases. The Fed sooner or later, you guys have heard me say this on the show a million times. It's not the rate increases that bring inflation down. It's the recession, or if not a recession, slowing of the economy that those rate increases do. That's what brings prices down. Now you got prices rising again in real estate. That's going to add down the road. Real estate really lags as far as an indicator. I haven't seen any relief. I went out to eat this week with my wife and was shocked by how much the bill was just for a pretty simple meal. It doesn't seem like prices much coming down at the supermarkets or anywhere else. Gasoline certainly not coming down. So I don't know. I think the Fed really wants to pause and see some numbers where the inflation is with their rate increases. You've raised 10 times in 10 consecutive meetings. That's a pretty brisk pace. But, the economy fighting back, inflation numbers still stinky. So the Fed's in a tough spot, man. Wall Street, interesting. I was telling you guys, Wall Street was betting 72% chance of a rate cut later this year. Now those bets are all quickly coming down off the board as Wall Street hedging. Looks like the market's not going to collapse. The economy is not going to collapse. So it's interesting that they're hedging their bets on cuts later this year. Wall Street usually, these traders that lead these markets are usually pretty smart guys who are they're not always right, but they're right more than they're wrong for sure. So I thought that was interesting. And you got all this rest of this stuff. I mean, if you look at what the headwinds the United States is facing right now, and I was just jotting down some ideas. Okay, so we know we got this commercial real estate thing. It's now starting to actually hit the mainstream press, talking about, the $1.5 trillion that's going to have to be refied. Will these banks that hold this debt be willing to refi that debt? What are the rates going to look like? We got big vacancies everywhere in big cities and commercial properties. How willing are going to be, these commercial property owners going to be to take big losses and refi and have massive payments they're probably not going to likely be able to make? That is looming large, right? Then you got add in all kind of extra stuff, right? So you guys see this clip of China with their ship cutting right in front of one of our destroyers in the South China Sea, Taiwan Straits? So now they're buzzing our planes, they're buzzing our ships, they have no fear of us. They want to make things very uncomfortable for us. China doing some serious saber rattling, very interesting stuff here, right? Now you got, everything just looking so crap. Now more money, hundreds of millions of dollars, more money and more weapons for Ukraine to keep that war going, so we can feed the industrial complex, right? The military industrial complex and all of their benefactors. Factor in, you got a primary starting up, debate's going to be coming up here in the next couple of months, starting up primaries. Next year is an election year. Those are always weird years for us, right? You got consumers running on fumes here. I don't know how they're keeping their head above water with payments like they have. 14% of car payments, I was reading today, mind-blowing. 14% of new car payments now over $1,000 per month. Who's paying $1,000 a month for a car? Who's doing that? Now you got debt everywhere. Literally, if you look at it, right, from the very top, from the U.S. government, the federal government, with their $32 trillion. State governments upside down, municipalities upside down, to the smallest little thing, corporations running on debt, right? How many companies can really look at their balance sheets and be proud of them, right? And you got consumers up to their eyeballs. The average debt on a credit card, $7,500 on every credit card in their pocket. $1 trillion in total debt. Just debt going up like more and more every day, right? Then you got OPEC announcing Saudi going to cut another 1 million barrels per day. Yeah, I mean, how does this all end, guys? I mean, how do we not have a debt implosion where this all collapses on itself? Who's paying? If everybody's in debt, who's paying the bills? Who's paying the bills, Matt? Are you borrowing money to pay your bills? I don't know how this works. Then you got this. I was reading today, this blew me away. So, Disney looking to raise some cash. I guess they own the catalog for Queen's music. Looking to sell that catalog. Over $1 billion. $1 billion with a B for Queen's music catalog. So stuff prices are certainly not coming down, are they, man? It's just crazy. So you look at this scenario, you see the outlook. It's really hard to have a rosy outlook right now. The state the country's in, the state individuals are in, the financial precariousness of everything just teetering on it seems like if one domino goes, the whole domino thing, the house of cards basically comes collapsing down. It's going to be fascinating, man. We got so much important stuff coming down. It's going to be just, I can't tell you, you've heard me say it before, guys. We're living history here. This stuff we're living through right now will be in history books down the road. People down the road, 20, 30, 50 years from now, will be talking about our generation. How did we handle it? What did we do right? What did we do wrong? They're going to have a lot of fun with that, aren't they? Anyway, that's it for the day. We appreciate your guys' support. We'll be back tomorrow with what we can drag up for tomorrow. It'll be a quiet day for data, but that doesn't mean it's going to be a quiet day on Wall Street or for the economy. The stuff we've been telling you guys all along is still the most important stuff to be doing. Save money. Hold on to every dollar you get, save a piece of it. Invest your money conservatively. Spend your money wisely. Don't add on new debt. Very simple stuff, guys, but if you can do it, all of this stuff isn't going to affect you as much as it's affecting everybody else out there. And that's where you want to be. Anyway, we appreciate your support. We'll be back again tomorrow. If you need anything or question me, please hit me up in the comments. If you like the video, please hit the like button. It changes the algorithms. It gets our video out there to some more people that might see it. We'll get some new subscribers up here. We appreciate you guys. Back again tomorrow. Until then, take care. Thanks.